Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, October 12th, 2016. So I kind of left it today that I wouldn't be pushing the short side, and I'm gonna go over that right now. Do I think the low is in? No. And what I mean by that is if they head higher, we're probably still going to come down and test these lows, if not break them. We could head low from here, head down from here, and take the lows out. But the reason why I wouldn't get too aggressive on the short side would be if we do take these out, and let's say it finds support at this 2020 range, what we're going to have is we're going to have price support, we're going to have a pivot support, and we're also going to have some bullish divergences. So does that mean that we have to make a bottom here? Absolutely not. What it's saying is, you press the short side down here and we have the divergences and things rally. It's going to be pretty painful if you're short from 2020 all the way up to the 2052, if not a little bit higher. So it's it's not something that you want to be pressing the shorts, because the short was up here where we had our limited risk here, and now you just manage the trades. So if it comes down, I'd probably wouldn't be 100% against waiting for a long side trade, and I'm not sure how long I'll be in it, just for the main reason that I still believe that the elections are going to put a lid on any massive rally. But if things are lined up as far as support holding and us coming into where we're seeing divergences, I'm going to try to do the same exact thing I did here. Take some type of long position with a stop underneath it and see what plays out. So you can see right now, this is the triangle that I've been following that it looks like we broke through yesterday. It looks like they're trying to get back into it. But this pattern is looking for the S&P to come someplace down into this 2108 area right here. That's just a pattern target. Does it mean it has to get there? No, this is the stock market. It's going to do what it wants to do, but patterns, what we're trying to do is take educated guess based on history, and this pattern would be calling for a move to come down here. So the long side at this particular point is not safe. If this is just an A, and now say we're coming down, making a wave B, and then we make another wave C up, I would be interested in shorting up here, because I just think that this break of the triangle is, even though they could bring us back into it, I still think that the damage was done on this. And any pops up here, any longs that were buying into what other newsletters were saying that we were breaking to the upside, they're going to take this bounce to get out. Now, they may come up and try to close the gap at 2162. There's an option for that. So if it comes down, I'm not 100% against looking long, as long as we have our stops in place. If it just comes down a little bit and then comes back up, I'd be interested in shorting here. And again, you're just going to put your stops someplace above it. But this is really where the resistance should come in, just because of the moving averages. But you can see this is also resistance right here. So this is the breaking of the triangle, came back up, and often what happens, it back tests it and then goes down. So that would make sense, and we again be looking for somewhere at this 2108 area. Now again, the biggest issue that I see is that they broke this big long bearish rising wedge, and that's looking for a target that's way down here. Does that come with a possible Trump election win? I wouldn't be surprised about that. I just think many people have it in their head that if he becomes president, everything's going to fall apart, and they're just trying to really scare everybody. I don't think anything's going to fall apart. But you could get that shocker to the downside. They might get a shocker if Hillary wins. I'm not going to get political in this, but whatever it is, this is where the target is on this particular pattern, is all the way down here. So that's the longer view. Short term, if we come down 2105 makes pretty close to that 2108 area that I was talking about. If that gets taken out, then we start looking at this the 2068 and the 2048. This makes more sense down here than stopping up here, but we just have to keep an eye on it up there. So still has room to go before we're oversold right here. We don't have any bearish divergences, bullish divergences. The bearish ones, we have a double set of them, and I do believe that we could go lower than some people are anticipating. So we're seeing the momentum tick up a little bit on the 60-minute charts. The MACD is trying to cross. So again, if they head up, just be a little patient. See if they come up to these areas here, or maybe close the gap and take a short position. If they come down, then we want to see how things are shaping up as we get into the support area. So that's really about all I have for tonight. I'm very open-minded for what they want to do tomorrow. If they want to take it higher, again, I'm looking to short. If they take it lower, I'm probably going to sit on the sidelines, wait a little bit, and then possibly be looking for a long position. And that's why what I've been saying is, just manage your short positions right here. I wouldn't be going crazy adding anything new, but I do believe that the lows will be taken out. It's just, the risk of it not coming down exactly when it was, especially after a big drop like this. You can be caught short in here, and the S&P ends up all the way up here. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.